Hello, everyone, and welcome to the show. This week, we will talk about the Canadian real estate market, who will remain unaffordable until 2035. Stick with us until the end. You don't want to miss this. Chris, the real estate market faces tough challenges. Housing is predicted to stay unaffordable until 2035 due to high interest rates and inflation. Mortgage rates aren't expected to drop much further, while new home prices are declining sharply. Toronto condo sales, for example, have plunged 91%, reflecting weak investor demand and slower population growth. Trends highlight the structural issues impacting the market. And my first question to you, Chris, is do you believe that the same thing that happens in Toronto will happen in other parts in Canada, but also in the States? We'll have that discussion as well.
Yeah, that's a fair question. You're pulling in multi nations into this one. That remains to be seen. That definitely remains to be seen. I think we will see some of that happening through the rest of Canada, pockets. Yep. You know, I think it's important to note that everything is kind of a little about these little pockets that happen, not just geographically, but housing types. Like you were talking about the 91% decrease in sales in Toronto condos.
Yep.
We're going to see that. We've seen that here, 7 years ago. Probably going to see it here again because we got another boom happening of condos happening in Calgary, particularly moving up into your neck of the woods, up in Edmonton there. So I think we'll probably see some of that there as well. But I think we're going to start to see a recovery in the Toronto condo market that took such a massive hit a while ago as well. Honestly, Jared, what goes up must come down.
Of course.
Yeah. Like everything here is so cyclical, right? So you get this massive uptick, you're going to end up with a downpout as well. And then vice versa. So yeah, I think we're going to start seeing some of the rest of that happening in Canada. But I think overall, though, they're probably right. Things will remain unaffordable for a good decade, if not more.
Yep.
You can't turn this stuff on a dime. And it's crazy the way house prices have gone up in relation to income levels. They're not corresponding.
And so what I would like to talk about is, because there's contradictory things that we watched lately. Mm-hmm. So for example, there will be a slower population growth, which normally will help prices go down, because there's less demand. But we saw that might impact the construction costs, for example. So those points, there's a lot of points that contradict themselves, and the experts say this will remain unaffordable into 2035. Do you believe it's the same in the States, United States, or this is just Canadian?
Well, whatever we got going on here with our changes in immigration, January is going to be an interesting. I shouldn't laugh, but January is going to be an interesting month. In the States, because we're just talking about bringing in less people.
Exactly.
And the people whose visas and everything are coming up for expiry, politely asking them to leave. Donald Trump's new policy is not quite so polite and much bigger.
Yeah, it's not Canadian. It's not Canadian strategy.
Yeah, no. It is very. It's not the polite. Hey, would you mind if you don't mind clearing a little room for us here? It is definitely not that sort of a policy that he's going to be going in with. Whether that actually culminates into what they're talking about. He's definitely a bit of an exaggerator. That remains to be seen. That's a pretty ambitious goal he's got, but yeah, it's going to be impacting them quite a bit more. And like you said, largely these are people that come in to our construction industry. So that's going to be affecting things for construction over the next little bit. And that 3.5 million homes that are required additional to what we're building, I haven't seen any changes to that number happening in the official forecast. So
yeah, me neither. I would have brought that up, but no, I didn't see any new information. So there's 4.9, so we're going to say 5 million temporary residents and students visa, and also temporary workers visa. So a few categories with a total of 5 million people that their visas in Canada will expire at the end of 25. So they have like 13 months left.
Yeah.
So that's why Altus Group says that data show condo sales were down 91% in October. Okay, joining the weak demand for single family homes. So this is new.
Yeah.
Usually, like townhomes and homes or semi-detached are pretty good,
Yeah, and overall, I think the single family, they're projecting like a 7 or 8% rise next year across Canada. Yeah, condo sales, or condo prices, maybe not so much, but yeah, it's definitely an interesting. It's a mixed bag of everything that's being forecasted, right? And 91% sales drop. That's
See, Altus Group data shows down 91% in October, joining the weak demand for single family homes. That's new. Yeah. Usually it's not the weak demand for single family homes.
Yeah, no.
It's either big or average.
Yeah.
And it's not unexpected since investors represent over 70% of the region's markets.
Okay, so let's talk about that for a second if we could. The investors are 70% of the regional markets. That kind of in a nutshell is a massive portion of what has been going on with why housing will remain unaffordable for another 10 years. Because people are buying it as investment properties, they're buying it as short-term rentals, which takes people out of the housing, takes housing out of the pool and just puts it into the hotel market.
Yep.
So you've got a ton of, not saying it's wrong or right, but it affects things, and affects things largely. And the sheer number of people that are buying things as investment flips, just expecting to capitalize on gains in the market. And they're doing that, as we've said so many times in the past, they're doing that largely in that condo market. And they're starting to see a lot of struggles with that right now too. Thus a 91% dip in those primary major markets, Toronto and Vancouver. And our numbers get massively reflected by that. So, we're seeing it out here. We're seeing the purchases out here, which have slowed down finally. You guys are starting to see the increase on it.
Yeah.
But yeah, Toronto, Vancouver, and investors, and they're not doing it there anymore. They're looking for cheaper grass.
Yeah. Exactly. Well said.
Or strangely said, one or the other.
Yeah. We can use both. Okay, we are a free country. So see, Canada real estate. So home prices expected to rise in all markets next year, says Royal LePage. And it goes in exactly with what you are saying. Yeah. So I don't know if you read this article, but this is exactly what it is. So that, I believe, you'll be part of the unaffordability. So see, the 2025 survey found that aggregate price of a home, calculated using a weighted average of a median value of all housing types, which is a more precise than using as an average, the median, will rise 6% annually by fourth quarter. Okay, so that's all homes. They'll rise 6%. And the report also says that the median price of a detached home is expected to increase 7%. Exactly what you said. Yeah. Annually by the end of fourth quarter 2025. And economy prices are expected to rise at more moderate pace, with prices set to increase 3.5%. that's some experts, right? So everyone is entitled to their opinion. They can bring numbers. What I don't feel in this report, people are not taking in consideration the recession. We talked about it last podcast, and I predicted the big recession. So I'm saying it again. I would like to be wrong.
Yeah, fair.
But this is, I feel it. And not only that I feel it, a lot of people feel it, especially the people that play with money, like hedge funds. Okay. In my opinion, that's the best way to look what those people are doing who have hundreds of billions of their clients' money. They are a very, very good indicator. And
there's
also,
a lot of people hedging their bets right now.
It's true.
A lot
with
of people hedging.
Oh yeah. And you feel it. And also, even the deputy prime minister accepted that we are in a recession, but with her words, which she called a vibe session. Okay. So I want to show you this. The vibe session could end next year. Okay. So I believe those people, the experts, believe that because of the vibe session will end next year, and because of the prices are set to go up, they will predict that the market will remain unaffordable. That's the basic premises, right?
Yeah.
But what if the people, the 5 million, only like 20% of them, 1 million, they go back home? And what if this vibe session, it becomes a recession and God forbid a depression?
Yeah.
Will that still be the case of the homes and the condominiums and the townhomes to stay unaffordable or not? Or the prices could drop drastically. I want to hear your opinion on that point.
Yeah. Well, and there seems to be this kind of weird, I don't know, everything is about opposites lately, but this weird thing where, and when we did talk about this in other podcasts as well, with the number of vacant properties that are sitting out there in the middle of a housing crisis.
Yeah.
With, this building selling for an ungodly amount, $1,000 a square foot, $1,200 a square foot, $1,500 a square foot for these tiny little homes, while this other one is vacant, and the property beside that going for quite a bit cheaper. And it seems like things will remain unaffordable while all of this surplus inventory sits there, because the market goes towards a certain type of product. And that market, once again, largely seems to be that investor-based market. And these investors don't seem to be investing necessarily the wisest, as a general market.
Yeah.
So yeah, I mean, I don't foresee where we're going to see any big drastic changes in these next 10 years, despite a potential recession, possible depression, possible vibe session. What the heck is that?
I don't know what the vibe session is. It's not, maybe it's not a beautiful vibe. I don't know.
Yeah, right. Well, and I kind of feel like they're just making, hey guys, we're not in a recession. We're not. You guys just kind of feel the vibe of a recession. Like, what?
Feel the vibe.
Yeah, you're just trying to make us all feel like we're not really in something that is like, this kind of, you're just feeling it. Like
it is, but it's not.
Yeah. Right. Oh man. Well, and I mean, largely that was kind of what led to a mass change in sentiment in the U.S. with that last election. Hey, we're not in a recession. We're doing well. But a large part of the flipping votes were in those spots that were feeling that they were in a recession. So
exactly.
I guess hey, there's some merit to the whole vibe session. I got to make up some words too. You know what we're in right now, Dragos?
Yeah.
We're in a Samagusta session.
A what? A what?
Make stuff up. It's the Samagusta session.
Samagusta session. That's
Samagusta session.
That will be the title of the video, probably.
That's going to be. That's going to be it.
Is Canada in Samanagusta session?
Is that you? Like no Samanagusta session we've ever seen before, in my humble opinion. Oh man,
that's good. That's good. Yeah. Well, it's let's see the details then, okay? Let's see the details.
Go to the details. Yeah, I would like to see the details.
Yeah.
Let's go to those.
See what's up, okay? So, in a brief note, to clients from BMO economist Shelley Kushik, published late Monday, the bank suggested that a decline in population, okay, until now, I'm okay with it, to a more manageable pace, like not like extremely huge mass immigration.
Yeah.
And
well, now we're negative.
Exactly. Yeah. I'm not going to be negative. And signs the economy is rebounding through monetary policy easing. By the way, for the people who are listening, the monetary policy easing, it's printing money and creating huge inflation. That's this is like the beautiful moral way to put it, monetary policy easing. Okay. I mean, the vibe session could dissipate in 2025, like by magic. Probably she took, well, CDC, the Deputy Minister, Chrystia Freeland, maybe she took an example from Justin Trudeau, which said that the budget would balance himself, you know, by himself.
Spend money on roads, people will be happier and they'll spend more money. You
know? Numbers will change place, you know, from red to black, you know. And BMO note comes only a week after Deputy Prime Minister Chrystia Freeland suggests the federal government proposed break on GST and HST, which is making the way through the Senate, would address the vibe session. So she invented this word. And now that we are here, what do you believe about the GST and HST?
Well, yeah, and you know, I think this is absolutely. I think this is absolutely necessary. I think it's absolutely bloody ridiculous that they're doing it as a 2-month deal.
Exactly.
The havoc that this is going to cause for businesses, small businesses.
To change your QuickBooks or Square point of sale or whatever for 2 months. And then at the end of the year, if you make a small mistake, the CRA will audit you for, man.
And the government does not take GST lightly. They're kind of crazy on that thing with small businesses too.
Yeah, it's
now like what is this? I do agree though that it should be done. I just think it should be
permanent. I would do it permanent.
Yeah.
By the way, taxes. I heard taxes was supposed to pay some I don't remember, like in the past, and then for a few years, and then off the sales tax.
Right. Yeah.
I don't know if it was a war or I don't know, cigarettes or something in Quebec. I don't remember. Or build the Olympic Stadium or something like that. There is a story about but that's probably only the provincial tax. But the federal tax, it's supposed to be for a few years.
And now, that up. I kind of wish I'd looked that up now.
Yeah. Okay. Perfect.
Interesting little.
Yeah. GST.
Checking it out.
Origins. Okay.
When you know what, just while you're looking that up, you know, we're talking about the unaffordability and how it'll take 10 years to get back. I did just talking about this pulling up stuff. 1980 average house price compared to average Canadian household income. Mm-hmm. So it was like 3.2. So if you made 100,000, you could buy a $300,000 house, which was actually like $67,000 house and $21,000 income. Now, and we talked about this before as well, it's almost 11 times the average income, the average house price. So that is what we're talking about, folks, when we're talking about being unaffordable. What did you pull up on the GST thing? I'm totally intrigued by.
Yeah, I see. I just GST Origins war effort. Okay, so there's no war effort. It was in my head. Maybe if we. Okay. What?
That looks interesting.
See, so man, I have good memory. So see, that's taxadvisors.ca. It's not John and Jill in their basement.
Yeah, fair enough. Or Quora, which is above that for that matter.
It's true.
Look at all our facts from Quora. Nothing but Quora.
Yeah. Canada's Minister of Finance at the time, Sir Thomas White, introduced the Income War Tax Act as a temporary measure to finance the war effort.
Interesting. Oh, so that's income tax, not the GST.
Yeah, it's true. This is what I'm saying.
All right.
Income tax. Okay, so income tax, not
I think
the GST.
we've had that for a while now, so that's out the window. That's staying.
Exactly. Oh yeah. The goods, but maybe not in the States. They're talking about taking out completely the income tax, the federal income tax. That would be wow. That do you understand what a economic engine the United States will become? And that will be good for everyone, but the deep state, the elites, and the politicians. You understand? Because it will create power, free market. More people will have money and power, so they will control less the population, which is one tool that is used, taxes, to impoverish and weaken the population. But let's stay on the the subject. The goods and service taxes is a value-added tax introduced in Canada in 1991 by the Prime Minister Brian Mulroney. Okay.
I love that. A value-added tax.
Yeah.
Way to feature benefit something that.
Yes, but I believe the value-added is like they tax the value that you add. Because let's say if you buy an apple, it's not taxed. If you buy an apple in a bag, then you taxed because you put a bag over the. You understand? You added the value,
right?
And that's taxed.
Right. Sorry, I misread that.
Yeah, I know that because I don't remember why and when, but someone explained it to me. It's the same, but it's also let's say some cold cuts. Some of them are taxed, some of them are not. Even if all of them have value added, because you don't have like a cold cuts in the street. You know, you got pigs in the street and chickens, and you know. So it doesn't make sense all the time. Okay, so we did this, the vibe session. We talked about it. What a beautiful word. And the last article concerning this. So the rate cut hopes could have psychological impact on home buyers, and that's 2 days ago. Yesterday, not even 2 days ago. So basically, what they're saying, it's the same numbers. They have the same numbers, 3.5. It's almost the same article. But they say that this will heavily impact people. So, it's called the recovery year. That 2024 was a recovery year, right? For Canada's housing market. And the conditions are now ripe for normalized growth in the sale activity and home values come 2025. So, in his opinion, Phil Soper, which is the CEO. I used to work with Royal LePage for 11 years. And I met him a couple of times. He's a very, very good person. And he says that we are done with the market. Everything is good. You remember that we talked so many times that we got the peak 2 years ago, and now we are at the same level as 2021. But he says it's okay. It's okay. Even we dropped a lot. This is the recovery year, and next year we will boom again. If we look at the, I don't know if we have it here, but if we look at the graphics, you can argue that. Okay, I don't have it here, but you can argue that, Chris. Okay, because it's like a trading stocks, so the stock will do a rebound. You understand? It'll come back and rebound again. Okay, so that can happen, even graphically. I can say that can happen, but I don't know. I have the feeling this will not happen. Like 2025 will not be the year of 10% or 9% or 7% that they say, in my opinion. Okay.
Yeah. Well, and 7% is a lot. Like, I mean, when you talk about
70,000 on 1 million, man.
It's huge.
So a house will cost 70,000 more next year.
Yeah.
When people, like 2 months ago, a month or 2 months ago, I saw people in, I don't know if it's Lethbridge. I believe it's Lethbridge or Calgary. Like 2,000 people in a lineup for food bank in a rainy day. I'll have to look into it, okay? And so I believe we're disconnected from what it is happening, what should happen.
Yeah. Well, and there's a great story to be vibe sold on the your rising equity in what you have purchased to live in.
Yeah.
But yeah, the flip side of that is the housing unaffordability and the continuation of it. And the fact that if you bought 2 years ago and your house just went up $70,000, like you just said, or more, well, you got to move into something else again still too, right? So you're gaining it on you're gaining it on one hand, but you're losing it on the other side.
Exactly.
People are staying in their homes longer. We're staying mortgaged for longer. Like, we're staying mortgaged as senior citizens. Well, if you're mortgaged as a senior citizen, you're a lot less likely to be moving out and moving into a retirement community versus your own home than if you had your everything paid off. And that house then is not going out to other people who are just starting into the market. The people that are starting into the market wouldn't buy that house anyway.
Exactly.
Because they want it completely finished. They don't want to put in any sweat equity, which, somebody who's living in that exact same house years and years and years down the road, like you got this vicious cycle going on that's just going crazier and crazier, where people are now paying more and more into the mortgages. More of their income is going into that. Less is going into savings. And you compound that with food. I can't even go to the grocery store anymore without damn near crying at the price of a steak. And I live in Alberta.
I came for the Alberta steak here. It's not that bad if my parents still live in Quebec, man. It's a bloodbath.
Yeah. I can't even imagine. I can't even imagine. I don't know what we're gonna have to start doing here, but it's like the cost of food is getting astronomical. Housing, mortgages, even with our crazy low interest rates, which they are still, like, everybody thinks they're like crazy high right now. They're crazy low still. Maybe not crazy low, but they're low still. We're just coming off of stuff that's insanely low, for so long. So yeah, it's a tough nut to swallow, but affordability is low. And every time they try to raise or do manage to raise the minimum wage, that hurts small businesses too. Like it's honestly, it's a no-win situation.
Yeah, it is true. I found the what I was talking to you about, the steak. I want to show you this. Look, this is $74.
$74.
But I have another one for 2.2 pounds. I don't find it, okay? And it was $85 in Quebec at IGA.
Yeah.
Photographed and videoed. Okay, there was not like a deep fake or stuff.
Yeah.
So this is Canada, man. This is Alberta.
Yeah.
That means we pay $35, $40 a pound of meat.
For something that we have right here. Right here. That is an hour south of here, where some of these ranches are like, that is just crazy. That is just an absolute crazy. That you wouldn't spend that going out at one point not all that long ago. Now you got to spend that and cook it yourself and put everything else on the plate as well.
Yeah.
It's hefty, man. That's hefty. We used to have steaks twice a week. Tenderloin.
Yeah.
All day long. Now,
yeah.
Dang. I cry when I burn that steak now.
You're like putting butter more and more in your potatoes. Make it big, make it juicier, make it bigger.
You're eating it. You're eating it.
Yeah. So, Chris, let's go to the next subject. You have something else to add to the unaffordable subject?
No, I don't think so. Just more whining and complaining about me not being able to eat a steak anymore.
Yeah. Yeah. So look at this. Look at this. Look at this. Okay. We talked about this. The problems with the unemployment. So jobless rate reaches 6.8% in November. Highest since 2017.
Yeah. This is just going up and up and up, right? Up
Do you understand?
Up and up and up.
That's not a good sign.
Yeah.
Why? Why? Because we talked about so many times about stagflation. So when you don't have the productivity to create products that will be able to, people will be able to buy with their money, then that will create inflation, right? But in the same time, you stagnate your production, your GDP. Those together, it's called a stagflation. It's really bad. Okay. Yeah. Maybe that's the word they're going to use next after vibe session. Vibeflation.
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 Vibe.
We are in a vibeflation.
Vibe, we're screwed.
Yeah. So, Statistics Canada November Labor Force Survey says that jobless rate this month reached the highest in January 2017. The unemployment rate was 6.5 in October. Okay? Look at this.
Yeah, that's crap.
Like you said, this and this, okay? If I look at it, Chris, and I analyze it as a graphic, charts, you see this. This was a resistance here. And now it's like 6.8. So the next one is here, 8.3. That's really bad. Yeah. That's what I want to show you. 8.3, it's really bad.
So how close to that do you think it's going to get?
I believe we'll go to 7.5, 8. Yes. Oh, yeah. And I'll show you why. Boom. Bell says reported pre-holiday layoffs are a continuation of the vibration of earlier restructuring. Yeah, right. Okay.
Well, and that was big news when that first started. Like that.
But what? Why? Because there's a lot of them. Why do I choose to take this article about Bell? Is that Bell during holiday season? It's full. Everyone wants like a headset or phones or new plan or you understand or whatever.
Brand new iPhone, yeah.
Exactly. That's so Galaxy. You are hiring people during the holidays. You are hiring students during the holidays because you need more workforce. There will be more demand. And what do? They lay off.
Yeah.
Okay. And it's not like bad people that they want to do bad things. Is that they have investors to answer to. So again, we should look at where the hedge fund money is or is going. What do you believe about this, man? Will this influence a lot or is just me talking for nothing?
Yeah, no, I think you're bang on. I think that's going to be, I think you're going to see more and more of this going on too. I was just reading about in BC, I want to say it was Korean battery manufacturer that has plants out of BC. They're just postponing a multi-billion-dollar project. We're going to see more and more and more of that. And we talked about this last time actually too. If you're running a corporation and you're looking at investing your money, are you going to do it here right now? I mean, that begs the question, and that all proliferates down, right? No big plant going in means no workers hired, means higher unemployment
You are so
rates.
spot on.
No.
You are so spot on. So that brings me to another subject, oil and gas.
Yeah.
In Alberta here, thank God we have oil and gas.
Yeah. Yeah.
Okay? You will see. You will see what I mean by that.
Yeah.
You will see what I mean by that.
Maybe we won't be the dirty child or the dirty brother that everybody pretends it doesn't exist.
Exactly. But they take our equalization payments.
Yeah. Well, you know what I call that, eh?
Hypocrites.
Value added payments. I call those value.
That's good. That's good. Yeah. Yeah. That's good. You have value if you're attached to Canada.
Yeah.
You get to give us 17 billion every year.
Yeah.
That we send to Quebec. Yeah.
Wait. Oh, that's another topic.
Yeah, exactly. So, but that will help us a lot here. You'll see. We will, if there's the recession that I'm predicting, it's not going to be rosy in Alberta either. But I believe because oil and gas, and because Donald Trump is the president, and because he wants energy security and energy dominance even, and we have the heavy oil that they need in their refineries to mix it with their sweet oil. They need our oil. You understand, Chris? It's not like a choice. It's a necessity. Either us or Venezuela and Iran and Iraq.
Mm-hmm. Yeah.
Or Russia. Or Russia. Or Russia, so I don't think so.
See where that goes.
Exactly. So, and we have a very good relationship with the States, Alberta.
Well, apparently at Trudeau's meeting, it was a good meeting.
Did you see the guy who was doing like the moose antlers?
No, I heard about it though.
Oh my God. Oh my. Okay. Moose antlers trolling Trudeau. No, when I do that, I have like photos. Anyway, the photo is on everywhere, everywhere, and that's that's what happened.
Well, so let me ask you a question with that. If the U.S. really ramps up the production of oil the way they're talking about, send it through the refinery, Canadian oil, American oil, whatever, it doesn't even really matter so much. Do you think OPEC is going to be on the hostile side again? Like, do you think we'll see some large decreases there where they just drive everything down?
Yeah. That's exactly what I was going to answer. Yeah. They'll stop not stop, but heavily reducing the production.
Yeah.
For it to keep the prices up.
Yeah.
Okay. In a sense that not getting like too much oil, prices go down. Okay. So if you reduce production, the prices will stay stable, right? Do you understand?
If they reduce,
of course, and they will reduce it. Okay, and that's one point of the left, is that if either they will do it or we will do it. We don't need both, That's the point. So let's them do it. Let them pollute. Okay, but in the same time, they say pollution, it's a planetary thing. Whatever we do here, the influence is there influence is here. And then, as hypocrites, they say that why pollute here, pollute there. It's contradiction every time with those people.
Yeah.
So that's my understanding. They will.
I think we could have called this episode "The Contradictions" because there's been a lot of.
Yes.
This is happening, but this is the results. This is opposites or.
Yeah. Exactly. And you don't know what to look at now. That's why I want to do this. And next year will be a very beautiful year. A lot of things. Yeah. And hopefully good vibes.
Yeah. Well, I know you're into the stock, so you got probably at least a year of seeing some good rises coming up here and some good opportunities.
Yeah.
Wish I'd bought into some of those Bitcoins, the Elon Musk Bitcoin. I wish I'd bought into that before the election happened.
I knew when I first saw the Bitcoin, I have to buy it. It was not even $1,000, 900 something US, and I had money, and I said, let's buy 10 or 11 or 15 or something, and I didn't. I just was very young and not necessarily concentrating on building wealth. But I was building wealth with real estate, but not like diversifying, and not what I know now, Chris.
Yeah.
And yeah, I regret that move. Because with 15,000 back then, you would have 1.5 million now.
Yeah.
It's amazing. And they say they predict some of them predict 250. I'm going to show it to you. And some of them predict 500 to 1 million. Okay, look at this. Voyons voir. There you go. See? Charles Schwab sees Bitcoin hitting 500,000 to 1 million. With government adoption, it says if you don't have at least 10% of your portfolio in Bitcoin, you're risking falling behind. Wow.
Yeah. Wow is right.
And that's the day.
Yeah, I gotta love you, man. I don't understand that whole world. I don't get how this wasn't just this weird fad that just faded out. Because that's sure as heck what I expected the whole thing. But
me too. Yeah. That's why I didn't buy it. Like I didn't want to be the guy that buys $15,000 for nothing.
Yeah.
Money is nothing. It's fiat money. It's nothing. But at least people are used to using it. They'll give you some food and bread if you give them some money.
Yeah.
Now with Bitcoin as well.
The only people that are going to be able to afford those steaks coming up are the ones that bought Bitcoin at the beginning.
Good point. Yeah.
Call them bit steaks.
Yeah, bit sticks. Yeah.
Steak bits. There you go. Hey, we just coined something. Steak bits.
Vibe coin. We should start a cryptocurrency called Vibe coin.
Yeah, I like it.
And link it to the Canadian dollar value as a stable coin. And have Christian Freeland's face as the logo.
Oh, there you go. There you go. Perfect.
Chris, that was amazing today as well. Do you have anything else to add?
As always, just a pleasure getting to chat with you and in front of all these fine folks.
Yeah. Me too. I really liked it. I like doing this. We'll continue. Soon we'll have a different format, and that will be great, even greater. Yeah. So nice. I would like to say thank you, everyone, for listening and for your support. And we'll see each other next week.